So,
This meeting is being recorded.
so
Great. Well, we are looking forward to hearing everything we need to know about this. I know some of our members know something about this, but certainly not everything. So thank you for presenting.
thank you, Kathy. And again, my name is Skip Knopf. I'm with presenting on behalf of ERC Today. I'm in Charlotte, North Carolina. The office is in Huntersville, and we help all places across the U.S., from Hawaii to California, Maine, Florida, all over. And the reason that we're taking time now is because we think that a lot of education needs to be looked at this. So let's dive in. I've put together a PowerPoint. It's 8 simple slides. So as we go through this, if you have questions, ask, and we want to make sure we've addressed them all for you. So why did they, let's go back. What happened? The reason that the employee retention was created is when COVID hit back in the early 2020s, the world was spinning around the US, and the government said we had to do something to help everybody out. And so the CARES Act was developed, and there were 2 parts. One was the PPP that most know of and participate in. And the other part was called the Employee Retention Credit, or ERC or ERTC, tax credit. And in the first year, you couldn't do both. And at the end of that, they realized that ERC is still a good thing. Well, only about 7% did ERC and 77% did the PPP. They changed the rules so you could do both. And that's when we jumped in the picture. And so what's important to realize is that you can do both PPP and the ERC. And from that, there's still a lot of CPAs that haven't grown beyond that. But that's something that we've had to educate everybody on. So let's talk about the benefits of the ERC. 2020, what we're doing is the IRS is rewarding y'all to get portions of your payroll tax dollars you paid in to come back to you. And so in 2020, it can be up to 50% or $5,000 per employee. Okay. Now, this excludes all owners and family members. So we'll look at the 2020 payrolls that you paid in payroll taxes, and up to 50% up to $5,000 per employee. That goes into a bucket, so to speak. And then 2021 is up to 70% or $7,000 for quarter 1, 2, and 3. Quarter 4 is taken off by the budget committee. And that can be a total of $26,000. So, but it's never that total. It just doesn't happen that way, $26,000, because you have PPP and other needs that are removed. It basically, PPP is taken off. So that is up front. Those are just the dollars that are on the table. And before I go to the next slide, are there any questions or thoughts that we need to look at before I go to the next one? Okay. Here's some details on the ERC. Unlike the PPP, it's not a loan. It's a loan to, I'm sorry. It's not a loan. It's yours. You don't have to pay it back. It is taxable, and you can use any way to grow your business, whether you need to buy some machinery, equipment, or remodeling, whatever, help for your payroll, whatever you want to do, it's yours to help grow your company. And a lot of people say, well, how long does it take to get this money? Well, they've got a fast track program. If your money is under $200,000, it could be 1 to 2 months. If it's more than that, it's 5 to 9 months. And there isn't really a reason or rhyme as to when people get it. But I will say, the sooner you do it, the better. It will work faster for you. Questions at this point?
Yeah, I have a quick question, Skip. What is, maybe this is coming up in another slide, but what is the deadline to apply?
Right. So you have 3 years after the last point of filing. So in 2020, it'll be, I think the first cutoff, it'll be 23. It'll be in July, for the first quarter in July 23, and then it follows afterwards every quarter.
Okay.
Okay. Let's look at how to qualify. First, they look at, because this is made for the smaller employees, smaller employer groups. In 2020, you have to have no more than 100 full-time employees, yet unlimited part-time. In 2021, it's up to 500 full-time employees and unlimited part-time. Now, looking at the definition of full-time employee, it's not equivalent full-time. In other words, 2 part-times don't meet 1 full-time. So we found that there have been a number of larger employer groups that they just didn't think they would qualify, that actually did, because we were able to scrub their payroll and see exactly, per the IRS regulations, who can qualify or not. Again, it does exclude owners and family members. Any questions with employee count? Okay. Now, after your employee count, there are 2 other doors we have to get through. The first one is called capacity restrictions. So whether you had a full or partial shutdown or limited seating, then you get the green light. So if you're under your max number of full-time employees and you had some type of capacity restriction, then for the largest part, you should qualify. Questions on capacity restriction? So that affects, of course, the restaurants and hotels and anywhere that the public comes in that you had some types of again, restrictions. And then if it wasn't capacity restriction, then you look at reduction or sales and revenue. These is an or, not an and. You can do one or the other. With reduction in sales and revenue, 2020, you have to have a 50% reduction for your third, fourth, typo, second, third, or fourth, sorry, I did this morning, quarters compared to 2019. And that's kind of steep, but it did happen, okay? In 2021, only a 20% reduction for quarter 1, 2, or 3. Quarter 4 was taken off. And these quarters are compared to 2019. Whether you're in 20 or 21, the basis point is 2019. So think about that. And another typo down the bottom of questions.
One second. I'm just interrupting you for a second, Skip. There is a question over here in the chat. Are seasonal employees considered full-time?
Well, it's really based on the number of hours that they work. And it's 30 hours, and there's a calculation of how many hours that they have to work to be determined to be full-time, and the analysts know that better than I do, but it is possible if they work long enough.
I have a question.
Yes.
Did you say that it's an or, the capacity restrictions or reduction in sales? It doesn't have to be both?
Gary Smart, right. In fact, let's just say a restaurant or hotel, if you had limited seating and your sales doubled because, you know, like you're doing takeout meals, catering, yeah, you could still qualify.
So most people in the state of Maine had limited seating or shutdown restrictions. So therefore, I would say everybody would qualify them without even getting into sales and revenue then, correct?
That is correct.
Okay, thank you.
And there's, I don't know, did you see there's another question in the chat? Do all the qualifications need to be met?
Well, either you qualify through capacity restriction, some kind of limited seating, or you qualify through reduction in sales and revenue. You don't have to do both, one or the other. For some reason, I don't see the
You
chat
don't see the
question.
chat?
I don't.
Okay. Jeb is asking, and the answer is yes, we will make these slides available to everyone after the presentation.
And then if there's no more further questions, we'll go to the next slide. And any companies that started, did we have a question? Okay. Any companies that started after April the 14th of 2020, since you didn't have the 2019 sales and payrolls and history to go for comparing how COVID would have affected you, you could do part of this ERC is called the recovery startup business. And again, after February the 14th, 2020, if your total sales average less than $1 million, you could qualify. And that also means that we have to look at the person who owns this new company. If you own other companies, their total sales must be less than $1 million. So it's a defined group. IRS uses the payrolls in 2021 of quarter 3 and 4, and you can max out at $50,000 per quarter, or you can get a total of $100,000. Basically, we found if you have 9 or 10 plus employees, then you will get the $100,000. So that's a very simple program, but that's it. So that's the recovery startup business. And so let's do this. We have some new people to come in. I've gone through really the whole program, really in record time. I'm just going to go back for those new people, and it's just a brush up for everybody else. And you can get the test at the end. So on the ERC benefits, again, in 2020, you can get up 50% or up to $5,000 per employee, full-time, part-time. In 2021, it's up to 70% or $7,000 for quarter 1, 2, or 3. If you add all that up, that's $26,000. No one hits that bell because you've had PPP and some people aren't full-time. But that's how the money is calculated for ERC. And then again, it's not a loan. You don't have to pay it back. It is taxable. You can use it any way to grow your company. How long it takes to get it? If less than 200,000, you should get 1 to 2 months. If it's more than 200,000, it's 5 to 9 months. You can look at some advanced funding procedures, but I wouldn't recommend that if they're expensive. If you can hold off, I'd just soon wait for that. Then again, the first door of entry is looking at the number of full-time employees you have. That's the first thing. And in 2020, maximum was 100 and unlimited part-time. In 2021, they lifted up to 500 full-time, unlimited part-time. But again, if you are an employee and you get 2 part-times, they do not equal 1 full-time. So you almost have to say, let somebody have your payrolls and scrub them to really secure what your employee count is. Again, it excludes owners and family members. After that, you must either have a capacity restriction, like full or partial shutdown or limited seating, and then you're good. Well, 99% sure you're in. If you don't have a capacity restriction, then you look at reductions in sales or revenue. In 2020, you have to have 50% reduction compared to 2019 for any quarter, 2, 3, or 4, and 21, just a 20% reduction of quarter 1, 2, and 3 compared to 19, same quarters. A lot of people on this, they go, well, I know it was tough times and it got better, and I'm really sure everybody knows what they did at the end of the year. Got that. Per quarter, I got to tell you, I haven't found anybody that knows that. Even the CFOs, they got no clue. So we just say, give us an Excel and we'll figure it out for you. That's simple, easy. Now, one to note, if you do qualify under the reduction of sales revenue, that for, let's say, 2021 quarter 1, they'll give you the second quarter just thrown in. That's a lot of money. That's nice. So you may qualify on one, either capacity reduction or with a sales reduction. And if it's both, that's great. But if you do it, if you're in both, and you qualify in sales reduction, and you get one quarter, they throw another quarter in. Always worthy of looking at that. If your business was started up operations after February the 14th, and you could have had an old company that was just lying around, then all of a sudden you decide to activate it. It's when the operations began being in business. That's when the start date is. It's not when you incorporate, so to speak. And collectively, your sales must average less than $1 million. That's looking at years 2020 and 2021. And those sales are all companies that are involved with the owner of this, who's created this business. And
Quick, sorry,
yes.
a quick question in the chat from Christy Bond. What is the estimated fees involved to file?
Okay, they let me get to the end of that. My last slide, I'll go into that. That's a great question, Christy. In fact, let's roll into that now. How to file? Okay, 3 different areas. One, a CPA. All of them know about this, and we found that a small portion of CPAs took this under the hat and made it work. Probably 10%. 90% said, you know, this is a one-time program. They're busy as they were, and so they just didn't raise their hand to do anything with their clients. Or many of them turned to us at ERC Today and said, would you be our back office for ERC? And we've done a lot of that. So if your CPA is dialed into this deeply, they would have contacted you probably 1.5 years ago. Yeah, a year. Yeah, March of 2021, they would said, hey, we got something for you to look at. But that's a choice. That's a resource. Then payroll services. They can do this. They know your payrolls. They just may not know your sales and all the data. I will say that it's really important to read your service agreements with them because those, we've looked at many, and all that we've seen so far have said, should there be an error, either by you or by them, that they hold themselves harmless. So they won't be standing up to any mistakes that were made, and that's the consideration to choose on who you want to have file this for you. Then you've got the third is the ERC specialists, companies like us, and that's what we do and how we do it. The fees, they can range, in some they're kind of, most of them are staggered. So the higher your amounts of return, the lower the fee amount. And that can go from as low as 5, there's a really large return, up to 15, 25, 30%. It's a wild, wild west out there. And you know, we can, I want to share with you that you can contact me or us, and we'll give you our full fee schedule. I want this to be a, don't want to be a sales program for y'all, but more educational. Yeah, we are very transparent and candid about our fee services. So you see it all up front. And if you apply through us, you don't qualify, you don't pay a penny. So that, I know that's not, I hope that answers everything you want, and we can talk offline. I'll give you all the details on that. Kathleen, does that
Before-
kind of hit the base on?
Yep, there is one more question from Jeb,
Uh-huh.
and he asks, so allocate your PPP per employee per quarter, total payroll for employee minus PPP for employee equals amount available for ERC. Do you follow?
Yeah, okay. So I think so. So we take all total payrolls. We pull out PPP. The remaining portion, we take the next or first $10,000 up to $10,000, and that's what applies to ERC. And in 2020, we'll go up to $5,000. In 2021, we go up to $7,000 per quarter per employee.
Okay. Does that answer your question, Jeb? Please confirm. Okay. Yes. Can he repeat the amount per quarter per year?
Yes. So let's go back to that slide here. That's full time. Okay. So, well, right here. So we've got in 2020, we pull out the PPP, and then we've got 50% up to the first $5,000 per employee. Okay. And then 2021 is up to 70% or up to 7,000 for quarter 1, 2, or 3. And if you add that 5 and 3 sevens, you're at 26,000 less any PPP. One thing I found is I would say 95% of everybody who's applied is amazed at the amount of money that they get. It's significant. It's like, wow. Some people call it their found money. They call it Christmas come early. It is, and again, it's not a government handout. It's really your tax dollars, your payroll tax dollars rather, you use during the COVID time to keep your employees there with you, helping your company, helping your companies with your customers. More questions?
I don't think so. I shared your contact info with everyone. skip.koff@erctoday.com. I also put your telephone number in here. We'll be sharing the slides as well as the recorded version of this webinar with the membership. Thank you so much, Skip, and thank you everyone for joining. It was extremely informative.
Well, guys, I appreciate that. I tried to make it as quick as possible. Sorry for a couple of typos. This is my first PowerPoint ever. I did this morning, so listening to
Great job.
the advice from Kathleen. So I'm excited to answer any questions y'all have. Email me, call me. Y'all are a great group. Honored to be a part of your group. And the goal here is to educate you, and the goal is here to help you see if you qualify. If you do, to help you. What we do is we refile your taxes. It's called a 941X for the years 20 and 21, which are appropriate. And basically, you can upload the information to us. We do the work, and you sign your 941Xs and mail it to the IRS and wait for your money. So trying to make it simple. Details can follow. Again, I'm honored to be a part of here, Kathleen, and with all the members here.
Now, before we let you go, Jeb is going to sneak in one more question.
Oh, yeah.
So, okay, it's on slide 7 on startups.
Yep.
What if start date is January 1st, 2020?
Nope. Got to be after 2/14/2020.
That's a no-go.
Yeah, that it would be for IRS.
Okay. Thank you, Skip. Thank you,
Thank you.
everyone, for participating. And maybe we'll do this again.
Looking forward to it. Thank you.
Thank you.
Thank you,
Have a good
team.
day, all. Take care. Bye-bye.